Good morning and Happy New Year to both of you as well. Last year Vietnam performed very well, and that's important because that's another consistent year of performance. This year in 2025, we expect the market to continue to perform well, underpinned by really three things. One, good government policies. Two, good corporate earnings. And three, a rebound in consumer sentiment.
Okay, I mean, that sounds like a pretty good setup. Let's get to the elephant in the room, though, I wanted to talk to us about what you're assuming about Trump, how aggressive he's going to be, and how impacted Vietnam is likely to be. And I want to bring in here the question or the issue of liquidity. I know, maybe 15 years ago, it was a very big issue for foreign investors, right? The ability to not just get in, but more specifically, get out of the Vietnam market is not as much of a concern today, though, is it?
Yeah, no, let's address that liquidity question first. Certainly, Vietnam market pre-COVID was trading about $250 million a day. Today, we're averaging about $750,000, and in some days, over $1 billion of liquidity. So that's really important for both domestic and foreign investors. Foreign investors also have been net sellers out of the market last year, but we believe there are certain things that will drive their attention towards Vietnam in 2025. And in that, of course, improving liquidity. Turning to the Trump question you asked first, we believe the Trump risk is overstated, specifically for a friendshoring country like Vietnam. If you recall, under Trump 1.0, Vietnam, as well as countries like Mexico, were significant beneficiaries. We believe that that will continue regardless of what fears there may be around tariffs and trade policies that the new administration, which will be coming into office in 2 weeks' time, may have.
Khanh, this is JP Ong. You mentioned a while ago about, or at least you talked about the government policies. I do want to talk about monetary policy in Vietnam, because while we saw very impressive growth in Vietnam this year in terms of GDP and also in terms of gains for the stock market, we did also note that the State Bank of Vietnam has often talked about the need or the urgency to try and boost credit lending and credit growth in Vietnam. Is this going to be a concern that will be front of mind for monetary authorities in Vietnam, and how is that going to impact the markets there, for better or worse?
I think if you look at a market like Vietnam, exports and FDI are very strong growth drivers. Equally, credit growth is a strong, important growth driver. And the State Bank of Vietnam have been very accommodating with credit growth. However, what they have is a very prudent and a risk-averse stance. And banks, therefore, have very prudent guidelines. This is a far cry from what happened perhaps 15, 20 years ago, which may be in the memories of some investors. Today, the credit growth is very well flagged. The government, the State Bank, I beg your pardon, very clearly dictates the level of growth it wants. And last year, we're looking at about 15% credit growth, and this year, equally about 15% credit growth. And that's going to be important for businesses because it allows them to access capital to stimulate, to carry on business activities.